But I think probably the best example of a longer term competitive advantage is what we're doing with BAT and the product development collaboration. So there's been a lot of work there that the market hasn't seen yet because it hasn't manifested in actual products and market.
What's up, guys? Welcome back to another episode of The Dime. I'm Brian Fields, and with me, as always, is Kellen Finney. And this week, we got a very special guest, Paolo De Luca, Chief Strategy Officer of Organigram. Paolo, thanks for taking the time. How are you doing today?
Very good, and thanks for having me.
Excited to dive in. Kellen, how are you doing?
Doing well. Excited to talk to Paolo. How are you, Brian?
I'm stoked. I think there's a lot we're going to talk about today. And before we were on the call, we were talking about kind of building long-term sustainable businesses. And I think sometimes in cannabis, the cycles are so violent and so short-circuited that it's hard to understand the dynamic of the differences. And I think what Paolo's doing in Organigram, there's set up for long-term success. And we're going to kind of dive into some of those specific pieces of the puzzle. But for our listeners unfamiliar with you, Paolo, can you give a quick background on yourself and how you find your way to the cannabis space?
Yeah, I'm actually an accountant and a financial person by background. And I got into cannabis, I guess I would have joined Organigram in December of 2017, so approaching 8 full years. In my past lives, I was involved in a mix of kind of large corporate and also more entrepreneurial style companies. And I thought cannabis was actually a nice mix of the two, and Organigram was already public, and I have a lot of experience in public markets. So I joined as the CFO for the first 2 years, and then was actually involved in a lot of the M&A and corporate development, as you would in that role. Found my time was a bit split between all the different obligations of being a CFO and also working on the kind of the growth elements of the company. So they created this new role as Chief Strategy Officer, which really entails setting kind of long-term strategy and then executing on that through a lot of M&A and corporate development. So I kind of think of myself as the kind of the growth engine of the company. I will help fund and then also build in strategic alliances, including the one that we have with BAT, and then execute on M&A to fulfill the corporate strategy that we set as a company.
No, I think that's great. And I think one of the things that we should talk about, though, is at a high level, just in case for the people out there listening are just unfamiliar about Organigram. Can you give us just a high level, what Organigram does and where do they focus their efforts?
Yeah, so we're a Canadian company by origin. We started off actually in Moncton, New Brunswick. And that's where our largest, most of our production still resides to date. A huge indoor 3-level cultivation facility. And there's a lot of post-production that happens there as well. I think we probably have the largest indoor facility in terms of production. We're at about 100,000 kilos right now, and there's room to expand that further through some plant science and some other interesting developments that we have. And then we branched off into 3 other locations from a manufacturing perspective. We bought a facility in Winnipeg that is focused exclusively on edibles. Historically just gummies, but we're actually also working on a small beverage setup there. We did an acquisition outside of Montreal in a ski resort town near Mont-Tremblant. That is there's a small cultivation footprint there where we grow craft flower and also where we service the number 1 market leading position in hash. And then most recently, we did an acquisition in near London, Ontario, which is about 2 hours southwest of Toronto, which is one of the leading extractors and fuels the number 1 vape market position that we have there. And we have a corporate head office in Toronto where I'm based out of. But Organigram is the number 1 company by market share in Canada. And we're number 1 or top 3 in almost every category. So we built a nice little business here.
Are all of those strategic acquisitions based on the fundamental, let's call it higher level approach of saying, okay, we want to be in these certain categories. We've identified these leaders and we think these guys fit really nicely into not only the short term of where the market is, but overall long term when things open up and things change, we think these core assets will help make a big difference for us across the supply chain.
Yeah, it's an excellent question. So, I just mentioned that Organigram is number 1 in market share. That's around 12% right now. So you would think that a number 1 market share position would be much larger. We expect over time that obviously that market share will grow. And when we looked at just having, for example, originally just the Moncton facility, it was a bit much to service all the different categories that exist in cannabis. So now we have specialized manufacturing facilities in different categories. So that's diversified our manufacturing base, and it's also allowed us to specialize within each of the categories. So we can take that. Each of those facilities can now do that much more. And again, with only 12% market share being number one, as the market in Canada matures and consolidates, each of those facilities can then expand their output further and drive even larger economies of scale. On an international basis, we're seeking EUGMP in Moncton, which will allow us then to do a lot more stuff with that facility and improve our margins there as well. So having multiple facilities is strategic and gives us a lot of operational flexibility both now and in the future.
And the diversification aspect that you alluded to, I think is really important, right? Because there's some aspects that you can control for it, but then there's some down the road that is really hard to know when it's happening because obviously your US counterparts, they're taking their time in certain federal aspects that maybe are hindering their ability to go internationally. So the international portion has to be highly opportunistic. There seems to be massive growth out there. Everyone's talking about that as the new frontier. Are those areas that you think are really boom for the next growth period?
100%. We had our best quarter from an international perspective last quarter with over 7 million in Canadian sales, and we expect to grow upon that in upcoming quarters. And that's without having the EUGMP. The EUGMP we expect to get, hopefully, it's not in our hands, but hopefully in the next quarter. And that, again, allows us to both move flower faster, and then also get better margins on that. And so I think international is a huge market that we've actually only started to really penetrate in a meaningful way recently. But I've actually just taken under my responsibility the international portfolio for Organigram. So I'll be able to probably fuel that a bit better now that I have the strategy in the M&A as well, because I can dovetail some of those deals that we're looking to do going forward into the international, which is a great growth opportunity for us.
EUGMP specifically, though, can you give some information on just how challenging and how long-term an investment that is? Because it's not like you can just check a couple boxes and be ready to rock. It's an investment into the facility, into the personnel, making sure everything is ready to rock. But it's one that's a separator, and one that maybe isn't a defining separator today, but is massively critical down the road. I think we all can admit to that. So can you give some information on the importance of why you started that process today and how complicated and expensive that is?
Yeah, it is. It's complicated and it is expensive, and it takes a lot of time and a lot of resources. And it's very different depending on the company that applies for it and who the sponsor is. We're using a German sponsor based out of Berlin, and for whatever reason, it's a more rigorous process, I think, than some of our peers who have. And there's not that many in Canada that actually have EUGMP, but I've been to some facilities that have the quote unquote EUGMP, and I'm actually alarmed that they were able to get it so quickly and we weren't, because our facility, for anybody who's been to it, is pristine. It's notable in how clean it is and how it's indoors, so we can control the environment that much better than a lot of greenhouses. The unfortunate part, though, is that there's only so much that we can do. The rest of it is always in the hands of the regulators, and depending on who you have as a regulator, there's different kind of standards, I think, even between countries as to how the EUGMP is granted. Having said that, once we get our EUGMP, people can be rest assured that we went through the most rigorous process, because it has been a very, very rigorous process, and we've been working on it for the past year.
Can you touch on the complexities of distributing into each different country in the European Union?
Yeah, so having you don't need to have EUGMP to get product into Europe, but if you don't, and we have the GACP standard, you have to use essentially a converter. So converters are available both in Canada and in Portugal, and also in some of the countries of destination as well. So what it does by not having EUGMP, it just slows down, because you have to ship in advance of when the product's actually needed, and there's a cost there. So that cost, it can be recaptured once we have EUGMP. So it's a margin accretion for us once we have that, and it allows us to move our product that much quicker. So it'll be a welcome relief once we get that. But you don't need to have EUGMP; you need to be GACP. But at the same time, it's a big benefit to have.
And this is another one of those aspects where maybe today it's not recognized as a key difference, but down the road when if it becomes a mandatory, your team's already way out in front, which I think is part of this strategic balance of your role, right? Is to understand, okay, what can we do today to set us up for the future success, but not only just short term, but long term, and understanding that there's a balance there.
Yeah. So what you've seen in Canada is really a divergence between some of the bigger companies into companies that have really leaned into international. An example of that would be someone like Aurora, and then other companies that are just exclusively focused on rec. An example of that would be Oxley. And so they both have their advantages and disadvantages. At Organigram, we're already number one in Canada in terms of market share. We're probably under indexing against some of the other large players on international. And now with this EUGMP and the expanded capacity that we're getting through our facility through investment in plant science and LED lights and so forth, we'll be able to catch up on the international side. And then we'll be essentially kind of top tier in both categories, which is, I think, a place that we want to be as a company going forward.
And from an export standpoint, for your partners over there that are looking for like a long-term partner, is that highly lucrative for your side? And you think that'll be continued growth focus going forward, saying export to overseas?
Yeah, we have to make a decision as how much we want to how much of our production we want to keep for Canada versus international. But I think again we're always looking for ways to increase our cultivation capacity through R&D and plant science and so forth. And absolutely, the margins right now in international are definitely better. How long that will last, or when the supply and demand on international markets will come into balance, is a question, and so we're monitoring that. I don't think we want to lean in so much on international that to the detriment of our Canadian business. So those are things that we have to keep on top of almost on a monthly basis to see what the market dynamics are like. Certainly, the German market has exploded, which has driven a lot of the international growth. We've seen companies in Canada completely turn around their business off the backs of international. And we're selling into at least 3 different German companies right now and have a strategic investment in one Sanity Group that is our largest customer in Germany. And I think that gives us a certain level of competitive advantage, having that partner and being able to build a relationship and develop get our strains distributed across the country under their brand, which will over time get some brand awareness and brand loyalty. So that's a long-term process. The German market in earnest has only really been growing at the pace it's at now for over a year. So there's still more growth. And again, the winners and losers in Germany will take some time to really determine who they are. The first year is always a bit of a land grab, and it takes some time for the real winners to emerge.
But that has to be such a challenging balance for you, especially like sitting there modeling out saying, okay, well, we could sell more here at the detriment of our Canadian market, and those numbers would look really good. But then again, there's that balancing approach. So where's the right line, right? How do you find that? Is it like a range? Is it a moving one? Is it a bunch of conversation? That's got to be really complicated.
Yeah, the thing that's really missing in the industry as a whole is good data. Canada has its own issues, and then in Germany there's no one source of truth in terms of how big the market is, or what the market share of the participants are, or how much they're selling their flower to, how much they're buying it for. In Canada we have Hi-Fire and we have Headset and so forth, but even the data in Canada for years has been very bad on the supply demand side. And one of the things that I've been pushing for, although I haven't really had much traction with it yet, because I think a lot of the our competitors are secretive. We disclose our production every quarter, how much we've produced and how much we've sold. But it would be great in Canada if we had a supply demand analysis that all the LPs can feed into to talk about how much they plan to grow, and what potentially even what their cost is. Because if that information was available 5-6 years ago, you wouldn't have had companies continuing to build out facilities. They would have known, for example, that they're on the wrong side of the cost curve, that it didn't make sense for them to spend $200 million to build another cultivation facility that was inefficient. And so what happened instead is Canopy, Aurora, Tilray, Afria, they built these multiple facilities in multiple jurisdictions, and they were never, in some cases, competitive, and they got shuttered. That's all capital that got destroyed. And so having the companies work together on even just providing basic information, no different than the oil companies would. You know how there's OPEC that kind of controls the oil market, and there's visibility as to which country is going to produce oil or take oil production offline. That would have been valuable information. It would have saved a lot of capital destruction. And so, going back to your question, the absence of information makes that task of forecasting that much more difficult. So you really have to have a lot of conversations with a lot of people, follow the public information that the companies are public, and make sure that you're connected as much as you can to figure out exactly where the pluses and minuses are coming from on supply and demand.
That's such a great point. And just thinking through exactly like you alluded to, right? Everyone was growth, growth, growth. And all of a sudden there's the cliff. And people didn't see it coming. And then there was a cliff and it was too late. There was no going back. So can the US companies learn from that at all? Can they apply any of the lessons? Maybe you don't want to share some of those, so they have to go through their learning curve themselves. But can the US learn from any of the experience that the Canadian companies have gone through?
Look, I think every cannabis company can learn from every jurisdiction and every other company that's had successes and failures. I think the U.S. market's a little bit different because it's not a monolith, the U.S. In terms of cannabis, because it's all state by state. There's no federal framework that exists. So really, each state is its own. You know, you almost need like a SWOT analysis for each state in the U.S. and the regs really influence your strategy, because the regs in California are completely different in New York than Michigan and Oregon. So I think drawing parallels is a bit dangerous between Canada and the US for that reason. I do think that over time, if cannabis is legalized in the US on a federal level, that framework will learn from other companies that have adopted federal frameworks. So Canada, Germany, Australia, to that point as well. And you'll actually see that some of the US companies are better positioned than others, depending on how they've developed their business. Every time I talk to a US MSO, they're really focused on their stores, their retail experience, the where the stores are located and so forth. In Canada, I think we tend to be a bit more focused on cost of production and our brands and our products more. So I think, again, it's very specific to the regs. The regs are going to dictate what you can and can't do and how you should set up your business.
Why do you think that the U.S. companies focus more on the location of the dispensaries versus the inwards approach of understanding operational efficiencies in their numbers?
Look, I should say that they've probably changed recently because now the capital is a lot scarcer. So, but I think they were just so focused on growth, and having retail stores was the fastest way to generate that growth. I think now we're in a period of austerity in terms of capital availability. So my suspicion is that now they're being a lot more focused on getting their efficiencies in place. But remember, it's a lot harder for you to drive efficiencies if you have to be, for example, have cultivation facilities in a bunch of smaller states. In Canada, we can ship everywhere. In the US, you can't ship across state lines. So you have to have cultivation facilities in each of the states, which again doesn't allow you the same efficiency. So I think the companies that probably are best positioned for a federal framework that allows you to move across state lines are people who have built larger facilities and have focused on cost early on in the process.
And I was
just going to say with your guys' large footprint, I mean, do you ever envision in like the long-term perspective, even like planting a flag in the US if like in the long term, there's the ability to export and import?
Yeah, again, that's going to depend on
just the three of us.
Yeah.
It's going to depend on a lot of things. Obviously, tariffs are a big topic of conversation now, so it's hard to predict how that's going to work in when US goes fully legal and what kind of trade is going to be allowed between the countries. We are already in the US on the hemp D9 side on beverages, and we'll be there with edibles soon as well. We'd love to be in the US market as much as we could, but cognizant of the fact that we're on the NASDAQ, we're just not able to touch the plant directly on the cannabis side right now. But absolutely, if there was a pathway for us to be in the US and be able to ship from Canada to the US, we would do that in a heartbeat.
as you're going through kind of like the companies that you were envisioning, my brain was just like, this one, no, this one, no, this one, no. Because I think your strategy, again, is focused more on the long term. It's like today the markets are all being fought individually, state by state, and maybe that's how it works out long term, or maybe there is interstate commerce and rescheduling very quickly, and then the whole game changes. And now the different facilities, they could be burdensome for some of these smaller operators because they've got 4 facilities in the Northeast where, your team's looking for where's one core asset. Now the game becomes a global game.
100%. And I mean, I think like the way I think of the US now, I think not to pivot back to hemp D9, but that market, I think, we think of like the cannabis market is really constrained, but in both in Canada and the US by where it's distributed. So like the stores are not particularly friendly in some states, or in definitely in Canada up until recently. I think some of the rules are going to be changing here soon. But in Ontario here, you walk up to a store and you can't see inside of it. It's daunting for someone who already doesn't have that idea that I need to buy cannabis. So you're leaving out such a large chunk of the population. Where I think hemp D9 on the beverage side in particular kind of demystifies the product, especially if it's sold. Places like Minnesota, we're seeing it take over stores like Top 10 Liquor and Total Wine, where even a small allocation of footprint is driving exponentially higher sales for them and for that square footage that they've allocated. And so I think there's opportunities to grow the cannabis category beyond the heavy user, which is really what's driving a lot of the sales in Canada and the US right now. So lots of opportunity. There's more opportunities than there are resources for us to pursue. So we're happy to take what's available now and then keep in mind emerging opportunities as the regs unfold.
Let's talk a little more about the beverage. I'm just going to make some assumptions that maybe long-term you assumed beverage would be a critical focal point, and you assumed eventually we wanted to be involved in that category, and then you watched the absolute explosion. Does what happens from a timeline perspective maybe change the strategy that you're thinking about and say, okay, maybe we're thinking about this in 2028, 2029, but given the growth, we think this is a true signal, not just noise?
Yeah, no, I think beverages. Maybe I may be getting the question wrong, so just interrupt me if I'm not answering the correct question. But I think beverages, to me, in Canada, beverages represents 2% of sales. It's nothing, but that's because they're in cannabis stores. The people that go to cannabis stores are generally people that need something stronger than 10 milligrams, which is the cap in Canada for edibles, including beverages. And so it's not a cost-efficient way for someone who really needs a lot of THC to get their buzz on to pursue. So it's a limited category. If we can get beverages outside of the cannabis stores in Canada, which is something that I'm working on, hopefully get it into liquor stores if possible, then that category explodes. It brings in a completely different user. We've seen Minnesota is probably the best market to look at in the US, where they've embraced it and they're regulating the space. You see a lot of soccer moms that are switching from wine to low dose THC beverages. You see novel cannabis users experiment with the product, and in many respects, it's a safer product in the sense of it's very hard to overdose in terms of drinking too much THC beverages, especially if it's dosed at 5 milligrams or 10 milligrams a can, because you'd have to drink like 5 of them to get the same experience that people make mistakes sometimes by eating a really high dose gummy or eating like 10 milligram gummies. So it's very difficult to abuse and to have the unforeseen circumstances. So I think it's from a safety and curiosity perspective, it's going to bring in a lot of new users. And we all know that alcohol is in a secular decline. Beer is certainly. And we're seeing that where cannabis is prevalent, that people are switching from alcohol beer to cannabis. So I think the THC beverages is another catalyst in helping that transformation happen.
100%. And you also had a chance to kind of use a brand equity here in the US that's growing pretty exponentially. And now you can leverage that information for future opportunities if we want to take that from a global standpoint.
100%. 100%.
What other areas you have your eye on from an A standpoint?
Well, in Canada, we're still digesting the 2 acquisitions we did, which are Motif, which we closed in early December, and then Collective Project, which is a bit smaller one. But so the company has to kind of digest that. There's a lot of synergies from the Motif acquisition in particular. We recently upgraded the estimate of 10 million of cost savings on that acquisition to 15 over, I guess it's going to be about, over the course of 2 years post-close. So that's fantastic. And I think there's a lot of opportunities for us to really build upon the acquisitions we made here in Canada. So I don't expect us to be active in Canada anytime soon. From an international perspective, the German market's is certainly the one that's continuing to grow. So if there's opportunities to either add on to our investment in Sanity or look at other potential investments in Germany or beyond, the UK seems to be a market that's starting to unlock a little bit. And Australia is obviously a market that's been around for a while from a medical perspective, not growing as fast as Germany, but still a decent sized market. So international is certainly something that we're probably going to look at from M&A perspective, but we're in no rush to do anything. There's no clear need to do anything right now. So we'll be opportunistic, but definitely would be willing to consider something on an international stage.
The Motif one, I think, is really interesting, right? It takes time for that synergy. And I think sometimes investors forget that just buying the business doesn't unlock all of those synergistic areas. So how do you then communicate with shareholders and then the internal team of, okay, here's the timeline, here's the numbers we want. And then how do you monitor to make sure that the investment is on track to hit, what the goal was?
Yeah, we had a whole kind of post-integration team that has been meeting regularly and continues to meet to make sure that we track all of those objectives of the deal, to make sure that we execute on it. Like the one thing that blew my mind in Canada in particular was when some of these companies did these massive M&A deals and then just dropped market share like there's no tomorrow. So we're balancing the need to hold on to the market share and then hopefully grow from there, and at the same time realize the synergies, which are really make the deal valuable from an accretion perspective. Some of those synergies, they take a little bit longer because just the cannabis cycle, you have to grow the plants, you have to extract it, so we actually have a lot of the inventory that we would have sold in our Q2, which was the quarter March 31st. They wouldn't have realized any of those synergies yet because we already had inventory that we had built up before we closed the deal. So these things take time, and then there's optimizations that happen. And one of the biggest optimizations that we're driving out of the Motif acquisition, they actually had two facilities. They had their one facility was in Aylmer, which is near London, Ontario, and then they had just set up a distribution center. So we're expanding that distribution center, getting the additional footprint licensed by Health Canada, which will allow us to then optimize our distribution across Canada. So we can have a hub in Moncton, a hub in London, and then to a lesser degree, a smaller one in Winnipeg to service edibles and beverages going forward. So lots of work to get these deals properly integrated. And the key is to do it in a meaningful way that doesn't disrupt the top line. And so we've been, I think, pretty successful to date in achieving that.
Motif is a pretty sophisticated, or was a pretty sophisticated organization. Has there been other aspects that have permeated the other portions of the business from a science perspective that you can share with us that have been pretty cool?
Yeah, they have certainly. Whenever you bring in another large organization, there's ways of working at that organization that differ from yours, and you kind of have to put them up side by side to see who's doing it best, and the best idea should always hold true. I think their expertise on extraction, we still have an extraction facility in Moncton, so there's ways that we can kind of cross-pollinate ideas there. They certainly, I would say, being a private company and being a bit more focused on only a couple of categories, they were a lot more nimble than Organigram would have been as a bigger company. And so we've integrated the teams now, so we're sharing ideas all the time between the two organizations, and then there's also the ability to leverage their brands. Like their Box Top brand is one of the top brands in the country, along with our Shred. And so that has a lot of opportunities to cross-pollinate the products in between different categories and between different brands, and allows us also to shrink our, when we took the brand portfolio of both companies, added them together, it was too big. So we've been able to slim that down by essentially eliminating some of the smaller brands that are too expensive to carry in a post-merger scenario.
And that's where operational efficiencies and all those data insights that you were talking about are so crucial, right? Having a really good grasp of how your team is currently producing and then working in with the motif team. Now, let the data do the talking. Here's what the numbers are. Here's how we make it make sense. Let's figure out the best way to go forward, redistribute the responsibilities, and go.
Yeah, and then the other excellent point, and the other thing too is now with scale that we have, being number one in Canada, just even buying input material from other companies, we're a large purchaser now of input material, whether it be biomass for extraction or for infused pre-rolls and so forth. And so having that scale and going to market, going to partners allows us to make sure that we dictate terms that are favorable to us.
Economies of scale, a real thing that the US just dream of.
Yeah.
Talk to us about the involvement with BAT. How close is that relationship? Is there autonomy? What can you share with us there?
Yeah, so we're an autonomous company. By law, they're not allowed to be too involved in Organigram because they have the regulatory rules in the UK called POCA, Proceeds of Crime Act. So they actually, by definition, have to, and by their own, they will stop themselves from being too involved in Organigram because, again, they have this kind of legal concern that it's always existed, and until that rule changes, they can't really, again, be intricately involved in the company. They do have 3 board seats out of our 10 board seats, so they do sit on the board. We do collaborate with them extensively on the product development collaboration, which has been in effect since we closed the first financing with them in March of 2021. And we are able to leverage their insights on and their relationship with various suppliers. So I'll give you an example. When it was time for us to put together a strategy on developing tube-style pre-rolls, or essentially look like cigarettes, they have so much experience with suppliers there. They were able to actually get us, equipment a lot faster than if we did it on our own. So I would say it's actually a bit of a Goldilocks relationship for Organigram because we get to use them as much as we need, but at the same time, they don't have the ability to quote unquote control the company. And then they've been obviously an incredible source of capital for us. We raised, it's got to be close to $450 million from them on very attractive terms. The second one was done at an almost 100% premium to where our stock price was at, which I think is a testament. We've got to be one of the only cannabis companies that has a follow-on investment from a strategic, which is a testament of, okay, we passed the first level of due diligence when they put money into us. Then they got to see from the inside, sitting on our board, working with us on a day-to-day basis, what we were like as a company, and they decided to invest in us again at 100% premium. So that's got to be the biggest vote of confidence that exists. So I think shareholders of Organigram, prospective or existing, can take comfort with the fact that a big, sophisticated company has done that level of diligence. And again, I think the relationship is only going to grow stronger over time as we enter new markets. And again, one thing that they have is they have international reach. They have regulatory expertise in countries that we have no presence in right now whatsoever. So again, it's a Goldilocks situation for us. I think we get to utilize them as a strategic asset as much as we need to. And then at the flip side, they allow us to operate with a certain level of autonomy.
And their core focus is agricultural products and delivering them to consumers. So the synergy has to be all over the whole entire business.
Yeah, I think if you're a tobacco company, the closest adjacency to substituting your revenues longer term for sure is going to be cannabis. It's the crossover is quite intuitively, and also in terms of when research has been done, it's quite high. There's quite a bit of overlap there. And so, yeah, I think the only thing that's slowed down more tobacco entry into cannabis is the fact that the U.S. has gone as slow as it has. But we all know that can switch in a heartbeat. Political expediency has a lot of power, and if Trump needs an uptick in his poll, it won't take. We're seeing people like Mike Tyson lobby Donald Trump, for God's sake. So there's a momentum there that will eventually, I think, overcome this resistance to actually move on the file in the U.S. at some point.
I can only dream that like one day we're sitting here recording and like that just kind of crosses across the screen and it just has happened right in an overnight. And now it's go time. But to go back to the BAT stuff, I think it's super important what you said is that they got to look to see how the sausage is made. And they didn't just run the other way. They doubled down and they recognized, okay, we want to be part of this organization for the future. We want to show our alignment with them going forward. And I think that is such an important marker for your team who's making these acquisitions with a forward-looking approach. Because I think sometimes what we see here in the US is people are making short-term decisions for share prices, for growth, because this is what they feel like they have to do right now. And maybe it's not what's better long-term. And now this gives your company some comfort in knowing that, okay, maybe today it's not amazing, but in 2 months or in 2 years when things alter the way we know they will, now we'll be best positioned to move forward.
Yeah, and I think, and one of the things that I talk about internally at the company all the time is anything that we're doing. Is it in furtherance of longer, like in terms of M&A or any kind of corporate development work that we're doing? Is it in furtherance of lasting competitive advantage? Are we doing something like it's very easy for us to turn around and just buy market share and buy top line revenue growth, but what you've seen in Canada in particular, and I think you'll see it in almost any market that starts off, with an unlock on whether medical or recreational, you see a lot of dynamic movement in market share within categories and successes. And so what ends up happening is someone comes up with a product. Sometimes they're pushing the regulatory envelope. They're doing something that maybe the regs said that you couldn't do, or it was a gray area. They come up with a product that captures a bunch of market share, and then everybody follows. So is that market share that you've captured, is it sustainable? Is it backed by something that is a real competitive advantage? In our case, I can list you all our competitive advantages. One of them is we have the largest indoor facility by production in the world. So that allows us to produce high quality flower at a very competitive cost. We have a dedicated facility that does hash in Canada. So hash is a very popular product, in particular in Eastern Canada and Central Canada. So we're number one in market share there. We have Motif, which is they're specialists in extraction and vape. So that's again a category that we're number one in. Those insights that we have there, we could take those to any other market. But I think probably the best example of a longer term competitive advantage is what we're doing with BAT and the product development collaboration. So there's been a lot of work there that the market hasn't seen yet because it hasn't manifested in actual products in market. Now we have launched products with the PDC technology. We have the fast acting emulsion that we have in our gummies. We've had some plant science developments that have come out with the work in the PDC. But a lot of the work that's been done in there is on science, like deep science, and basically the type of work that you would need if you were trying to inform regulations in a country like the US, for example, with the FDA. That's really the master plan behind why BAT wanted to invest in Organigram in the first place. They saw the US would eventually will go legal. They know that the FDA will be tasked with regulating that. They have a lot of experience with the FDA on vapes and nicotine in the US. And so they know there's going to be a certain standard of safety testing and efficacy understanding that's going to be needed to inform those regs. Well, we've done that work, or we've started to do at least some of that work in the PDC. And now we've actually turned the PDC into more of a commercially focused exercise. So we're now looking to actually get some of these products into market. So the fast acting gummies is the first of them, but you'll see more of them in the upcoming years as well.
No, I love it. Just like thinking through what you're saying, just thinking about the synergy and the resources that they can provide from a guidance, from a personnel standpoint, for things that they've seen and say, okay, like these are the type of the mistakes we've made in the past. We think given where we see the industry going, here's some recommendations, which is nice. Then you have another beneficiary or another partner in the board who's saying, guiding you. Because sometimes what you were saying before is that you don't have the data to make those decisions, which makes it so complicated and challenges. But having a partner like them who's seen some things is really helpful for guidance on some of the unknown decisions.
100%.
What about AI? Does your team experimenting at all with AI? Is there anything there you could share with us?
I'm not the expert in AI. We do have a group of individuals that are working are experimenting with it. I think some of the more commercially focused people are using AI for obviously to just make their day-to-day tasks. I think in the plant science area is probably an opportunity for us to really exploit AI, because we have one of the things that we have at Organigram is we have guess we would have started cultivating even before I joined the company. So going back to 2013, we have kept all our data from all our cultivation, all our grows by strain, keeping track of. We had actually developed our own proprietary software called Organigram, which captures every element of when we fed the plant, what nutrients, what lighting we used, how long, what the cultivar was. And so there's a treasure trove of data out there that we can probably use AI to filter through and work on. But that's not something I'm particularly close to. So I don't want to spend more time on it than to indicate any more than knowledge that I have on that.
For sure. Just with the topic now coming up and it's so fast and given your long-term focus and all the elements that you laid out from a competitive advantage, it just seemed like that was part of the stack and maybe not something that you can share today, but maybe down the road, things like that will become more and more apparent as decisions are made. Or as you said, the data gathering right there is the first step in utilizing it best long-term.
Yeah, and I think the industry, again, I think I mentioned earlier, it's one of the things you need to do any kind of analysis and going back to my first IT class 30 years ago, whenever I was in school, is kind of garbage in, garbage out. We don't have a lot of great info in some instances in just the market in general, and then even the providers like Hi-Fire and Headset. When we get their data, we have to manipulate it to correct it because we actually can see that there's issues in the data. So we have, internally when we send out our reports, we have the Hi-Fire data unadjusted, and then we have the adjusted data because the system that they use is not perfect. They use a lot of interpolations that are not necessarily accurate, and it's better in situations where they have actually data from the stores. In some cases, they're just estimating.
Yeah, not helpful at all in those aspects,
No.
right? Because we can do the same thing on the side.
Exactly.
So talk to us about some of those long-term bets. I know we talked about IP and efficiency and export. Is there any other elements that a listener of Organigram just might not be familiar with that you think is really important?
Yeah, one of the things that we haven't talked about yet is our investment in seed-based cultivation. So we made an investment in Phylos, which is an Oregon-based company. And we've been using, I don't want to say experimenting because we're actually producing now 20% of our production comes from seed-based cultivation. And for your listeners who are not familiar, the majority of cannabis companies will clip clones off of existing mother plants. And that's the way it's just been done in the industry forever. But if you look at, traditional agriculture, the majority of agriculture is done through seeds, and seeds offers a whole bunch of advantages, including consistency and lack of genetic drift and so forth. And it's also way more efficient. So we can get more turns out of our rooms using seeds than we can through clones. We know that we're on the right track there because we see our competitors now copying us. So they're now starting to experiment with seeds as well. But we have a 2-year head start on them. And I think that's going to really help us, again, get even more efficient and help us drive our margins. And again, as a company that we've rebranded ourselves as a global company, eventually we're going to have cultivation facilities beyond just in Canada. So we can take all the learnings that we've done on the seeds to those markets as well. And we see even US MSOs are starting to do seed-based production as well. So we think in 10 years, the majority of cannabis companies are going to be using seeds versus clones, but they're just behind the curve on that.
Do you think that's the way towards like consistent product SKUs for flower and pre-rolls across the board?
Yeah, the benefits of seeds is that you don't you get more turns per room, and again you don't have to remediate the genetic because you get a lot of genetic drift when you're using clone and so forth. So it will allow us to there's a certain amount of experimenting you have to do and make sure that it grows in different conditions. But we expect, for example, outdoor grow, which is becoming a bigger part of the Canadian business as the market's grown and as people have shuttered their greenhouses. It's very useful there. So we know that majority of the outdoor growers and farmers are now starting to experiment with seeds as well.
And they were a super impressive team. We spoke to them, I think, a year or two back, and it was super clear that they were ahead of the time. And like you said, this is inevitably what we believe the future of the industry will likely look like. It's expensive today, given how the development is. But you said a couple of things that I really want to highlight. One, you pulled from big ag. You pulled from another industry, right? Cannabis is a microcosm of all these other industries blended together. For extraction, oil and gas, are there techniques there that your team is pulling from, let's say, oil and gas extraction tools in order to bring it to the facility and figure out where efficiency is?
Yeah, what's the one thing I didn't mention with Motif when I was first introduced to them and I asked them what their backgrounds were. I think like 3 out of the 5 top guys were all chemical engineers,
Bang.
which is like the perfect background. And they had worked for oil companies, just as you know, in the refining space. So I think, having that, and we have people in our company that come from tobacco. We have people that come from alcohol. We have people that come from, more food-based CPG. You have finance people like myself, which bring a completely different skill set. But I think bringing in lessons and capabilities from other industries is very, very useful. And I think big ag for sure on the cultivation side is the Phylos guys like to talk to themselves almost as like the Monsanto of seeds, but not without all the negative connotations associated with that. But 100%, I think anything that we could take from other industries is going to be beneficial to turning cannabis into this, this hopefully investable space that for better or worse has necessarily transpired in the last couple of years.
And that also is able to come to fruition with the investment from BAT, where you can invest long term, knowing that, okay, today it's not like this, but down the road, here's some of the tools that we need to apply. They might not come out of the box perfect and ready to rock, but if we can get these integrated in front of our competitors, we have a massive head start, and they'll all be playing catch up, which will give us even more of an advantage when the tides turn.
Yeah, and I think a lot of the things that we've done, the investment in Phylos, the M&A deals that we've done, the commitment and spend that we have with the PDC, these are all, again, meant to be lasting competitive advantages. It's a lot harder for a company that's, has a broken balance sheet and is having trouble making their payroll to make an investment in seed-based technology because the payoff is not immediate. So again, a lot of the things that we're doing, I think that differentiates us from the competition is these investments in advantages that will help us kind of in the medium term in Canada, but then beyond that on an international sphere. So, we go into a new market unlocks in Europe or the US or anywhere in the world. All the learnings that we've taken from Canada, plus all the, kind of the leading extraction capability or the leading indoor cultivation capability, that could be transported over borders a lot faster going forward than having to learn from scratch, right? So those are all the learnings that we can bring into international markets. And Organigram in particular is also really focused on derivative products. So the edibles, the vapes, and so forth. That's doubly faster to move over because you don't have to build a cultivation facility, which obviously requires a lot more lead time and a lot more capex.
It takes up a lot less space too.
Exactly.
Is there any partners that are listening where you're like, hey, if a company's doing X or Y, this tool or this solution or this product would be really enticing for us. We're looking for something we just haven't found. And then if there's something like that, can you share it?
You mean something that we're doing that another company can learn from us? Or sorry?
More so the other phrase where it's like you're struggling with this or you're looking for a partner in this area. And if anybody's listening to this would be the type of partnership that we're looking for growth. We're looking to fill it into the partnership.
Yeah, I think the probably the most greenfield opportunity for us is getting further distribution and partnerships in international markets. So to date, we've been building that for sure, but we've been again limited in the amount of flower that we've had. And I use flower as an example because flower it tends to be again the largest by far category in international markets. But now that we've got more production and we've really dialed in our ability to get that much more flower out of each room that we do, and the seed-based helps us turn more rooms per year. Just looking for partnerships in different jurisdictions. And, I think we've got a good partner in Germany. We've got a good partner from a customer perspective in Australia. But there's emerging markets like Poland, the UK, that are becoming interesting going forward. So anybody listening that wants to reach out to us can reach out to me or anybody else on my team.
Yeah, those specific markets I'm always curious for, because I think sometimes people listen and they think, I don't know if he's talking about mine. And then you say Poland and then he's like, ding, there's a light bulb. Now is the time to reach out. And those are always the helpful parts because this industry is super small, right? And sometimes it feels really separated, but it really is a lot smaller than it ends up being. What do you think needs to happen for cannabis to go from volatile to investable?
I think it's actually, a lot of it's happening now. I think the biggest benefit, but also curse to cannabis historically has been the availability of capital has been too easy. So it's, companies that hadn't really proven anything were able to generate massive amounts of capital inflows at very lofty valuations. That just led to a series of bad decisions, I think. And I think the Canadian LPs were some of the worst culprits. Like I think of the Canopies and the Auroras of Afrias of even Tilray. They raised just so much money. They just squandered it on a lot of these oversized cultivation facilities that never had a chance of being successful. That's evaporated now. Now, there are some companies that are able to still tap into capital because they have such great liquidity, like Tilray and Canopy still have very good liquidity, and so they can run ATM programs and so forth. But now that the capital has kind of shrunk, it's forced companies to become efficient very quickly. And you're seeing now companies not just produce one quarter of positive EBITDA, but now a series of positive EBITDAs. And a lot of them have also been able to fix their balance sheets. So I actually think as a sector, in Canada in particular, I think the sector is becoming investable and the valuations are very reasonable. A lot of companies trade for less than one-time revenue and 5-6 times EBITDA. And those and the revenue and EBITDAs are still growing. And the balance sheets aren't actually in that bad shape. What I think the next kind of domino that needs to probably happen is to see the institutional investor enter the space. I think they're probably looking at the space and seeing that the numbers are turning around, but then the market caps of some of these companies are small and the liquidity is not particularly that great. I think that'll fix itself in due time, though. I think I have a feeling that the sector has kind of bottomed out a little bit here, and seems to be more up days than down days in just the last couple of months. So any kind of spark out of the US in terms of a regulatory development will bring back liquidity to the sector. And that interest will kind of bring up the market caps, and liquidity will allow then people to feel a little bit better about entering the space and not being stuck on a position that they can never get out of because there's not enough liquidity in the market. But I'm more optimistic certainly now than I was a year ago.
I love it. We'll hold that optimism going forward. So 2 last questions, hard pivot here. Most impactful book
that I've read, period?
That you've read, period.
Look, my favorite book, it's a business book, is a book by Roger Lowenstein called The Rise and Fall of Long-Term Capital Management. It was written, I'd say, probably in 1998, 99, after the largest hedge fund in the world at the time crashed. And essentially almost brought down the entire financial system around the world. And it's just a very well-written book. But it's interesting because all the lessons that in that book, all the mistakes that were made in that book were almost made again 10 years later for the credit crisis. And I find the book interesting to read because it's really a story about how very rational people that work in finance start to do very irrational things based off of ego and overestimating of their ability. So that's my favorite business book. That's the best I can come up with on the spot.
I love it. Last question. What question do you wish more people asked you?
In terms of the cannabis context? Yeah, I think a question that I would ask if I was an investor in the space to any cannabis company executive is, what are your long-term competitive advantages? Because I see a lot of companies actually putting out some pretty good numbers from a financial perspective, but I'm not sure that they have anything that's defensible. And so anything that we do on the corporate side, M&A or strategic partnerships, is always in furtherance of making sure that we have something that's going to stand the test of time. So if we're buying a company like a Motif or anything that we're doing internationally, we want to make sure that we're working with partners that are, reliable, and again, the assets and the people that come with it are bankable for not just a couple of quarters, but for a few years.
I love it. So, Paolo, for our listeners, they want to get in touch, they want to learn more, where can they find you?
Paolo.De Luca at organigram.ca, or just anywhere through the website. There should be a contact link on our organigram.ca website.
Thanks for taking the time. This was a lot of fun.
It's been great. Thank you, guys.